Hello everyone, in this video we're going to be going through the topic of warranties. So what is a warranty? First of all, it is a promise by a seller to repair or replace a product if necessary within a specified period of time. Okay, so we have two types of warranties that we're going to be worried about in this class. We have the assurance type warranty and the service type warranty. The assurance type warranty is the warranty included with the purchase of a product. So if you buy a computer, you get this 2-year warranty or 1-year warranty or whatever with it that says, if there's any issues with this product, when we sold it to you, we'll fix them, right? Obviously, these warranties are not like super extensive or whatever. And so a lot of times customers will purchase a service type warranty, which is an extended warranty that provides additional service after the period the assurance type warranty ends. And it's not included with the purchase price of the product. So that's the difference, right? Is that it's not including the purchase price of the product for the service type warranty, but the assurance type warranty is bundled in with the price of the initial product, of the computer or whatever you're buying, okay? Also, the service type warranty is basically, it provides additional service after the assurance warranty is over, okay? We'll get into a little bit more detail in just a second. I was skipping ahead a little bit, I was just about to skip ahead. But let's just finish this first. For example, an additional 3-year warranty on a computer that you bought after the first 2 years are over, okay? So you buy this additional warranty for the next 3 years after the first 2 years, okay? Then you have this assurance type warranty and the service type warranty, a little more detail. Companies do not record a separate performance obligation for these assurance type warranties. And then also the expenses obligations in the period when the sale of the product the warranty covers is recorded. So basically, when we sell the product, if we sell this computer, whenever we sell this computer, we record the expense that we think we're going to incur in terms of assurance type warranty at the same date when we sell the computer. Okay, the amount of the expense recorded is the company's estimate of all future costs it will incur with respect to the warranties. This is basically just going to be given in the problem. You're just going to have to identify what it is. Okay. Then we have service type warranties, which are a separate performance obligation for the company. Again, a performance obligation, what does this mean? Okay, basically a performance obligation is just a promise to do something. Okay, so we have to do something extra. Okay. The assurance type warranty is not a separate performance obligation because it's all bundled in with the computer. It's not separately identified, but the separate performance obligation for the service type warranty, it's a separately identified promise or obligation to do something, okay? And it has its own standalone selling price, okay? So here, when the cash is initially received, the company will record unearned warranty revenue, and then as the contract period passes, the company will recognize revenue on a straight line basis, meaning that they're just gonna recognize the same amount each year, okay? So let's just look at a quick problem, and this will all make sense once we go through a quick problem. These are not too bad. We just have to see a problem, and then once we see the problem, like, oh, okay, we see what to do, okay? On January 1st of 2017, XYZ sold 10 computers for a total of $5,000. These computers included a 2-year assurance type warranty to fix any issues that were present when the computers were sold. At the time of the sale, XYZ estimated that the company would incur a total of $1,000 expenses related to these warranties. Okay, so this is straight up just telling us, okay, this is the amount of the assurance type warranty expense, right? Because they're saying there's a 2-year assurance type warranty and the amount of expenses we would incur for these warranties is $1,000. So that's gonna be important when we're recording our journal entry. Additionally, every customer that bought a computer purchased an extended 2-year warranty for 2 more years after the initial warranty for a total of $2,500. On July 1st of the same year, 2017, the company incurred $600 to fix some computers that were defective. Now it says prepare the journal entries that are necessary through December 30th of 2020. All right, so January 1st of 2017, when we actually sell the computers. Okay, we have a few things going on here. Okay, the first thing is that we debit cash for $75. Where is this coming from? Well, we sell the computers for $5,000, right? Okay, that's the first part of our cash. The second part of our cash is the $2,500 that customers pay us for this extended warranty. Okay, so what's happening there is that one, we're selling a product for $5,000. Okay, so that's $5,000 of cash. The second thing is that every single one of these customers buys an extended warranty for a total of $2,500. They have to give us that money up front, right? When you buy a warranty at the store, they don't say pay us in 2 years. They say pay me now, right? So you have to pay that money immediately. Okay, so on the credit side, we have two things. We have the sales revenue for $5,000 for the actual sale of the computers, and then we have the unearned warranty revenue, which again, we just talked about. We record this as $2,500 unearned warranty revenue because it's a separate obligation. We have to do this separately from just selling the computers, okay? So that's gonna be something we're gonna earn over time, okay? So basically what's gonna happen with this is that after this first assurance warranty expires for the next 2 years after that, so that would be in 2019 and 2020, this company is going to earn $1,250 of revenue each year, okay? Because what's going to happen is that they have $2,500 total for 2 years, okay? Which means they're going to recognize $1,250 of revenue in both 2019 and 2020, okay? So they initially record it as unearned revenue, and then once they're servicing the product, once the time is passing, right, we record the revenue. It says, as the contract period passes, the company recognizes revenue in straight line basis. Straight line basis meaning equal amount each year, okay? So then we have basically one more thing left, which is it tells us again that the expenses related to the assurance type warranty is $1,000. So we just debit warranty expense for $1,000, credit warranty liability for $1,000. And that's the first journal entry. Obviously, there's a lot going on there, but if you break it down piece by piece like we just did, it's not too bad, okay? Then on July 1st, it says they incur $600 of expenses, okay? So to do that, this is for the initial assurance warranty, okay? And the way that we know that is because that's the only thing we've recorded a liability so far for, so that would make sense, right? And also it's within the time frame of the assurance type warranty, right? So to do that, we would reduce the liability account by $600, right? Because that's part of our estimate of how much we're going to use, right? And then we're going to use, like this credit could be cash, it could be labor, it could be some sort of parts, like to fix the actual computer or whatever we're selling. Okay, this credit doesn't matter as much exactly what you put. Again, you could have something like labor, or you could have something like inventory if you were like getting rid of some like parts that you need to replace the computer. Like some of the parts of the computer need to be replaced, something like that, okay? Something that makes sense would be the credit there. The debit's always warranty liability because we're just reducing the liability to show that we're actually satisfying part of this liability at this point by paying out cash or something, by solving the problems with these computers, okay? And then again, these journal entries at the bottom should look relatively straightforward because we talked about at the beginning, right? So in 2019 and 2020, this is the 2 years for the extended service type warranty. And so what we're going to do is that we're going to record $1,250 revenue of each year. So what we're going to do is that we're going to reverse out $1,250 of unearned warranty revenue and then record warranty revenue of $1,250 for each year. Because again, the way we're earning the revenue is just the time is passing, right? The warranty is expiring day after day after day. And so by the end of the year, we've earned $1,250 of revenue in both years. Okay, so that's basically the end of this video, and I hope that that was helpful.